Okay, thanks for joining this webinar. So this webinar is all about candlestick chart for beginners. So why I say beginners, because in 1 hour session I won't be able to share all the knowledge on candlestick. So I'm going to choose some of them which is very popular among the traders. Okay, and why candlestick? Because it is an important aspect. If you are a trader, and if you want to analyze the market using the technical analysis, so candlestick is basically fall into the technical analysis. So when you are able to read the candlestick chart, mean you are able to read the market movement. Is it market going to go up or going to go down? Okay. So before we begin, I'm Branches. Actually, currently I'm working as a operation in the QMS Advisors, one of the company in Shah Alam. And I'm an active trader, currency as well as stock. When I talk about stock, I only trade in Bursa, Malaysia. I haven't explored into US market because it's very volatile. And I am also a technical trainer. And next 2 weeks from now, I'll be working with previous employer, working in collaboration on the QC qualification process. Okay. So before we begin, let's check our mic webcam. I believe everything okay, right? Okay, first of all, I would like to know what would you like to learn from this session? Perhaps you can type in a chat box. What actually you wanted to learn?
Recognize the okay. I've just key in Branches. Basically, I would like to know. I know Malaysian markets are a bit volatile at some time. So it is, as investors, how to quickly recognize unwanted trends, or how to recognize the positive trends. At least we know when to park in our money in the market or when to pull back. Basically, that is what I'm running in my mind.
So you wanted to know how to recognize the market trend.
Yes.
Okay, there are two things. One is fundamental analysis. Another one is a technical analysis. What I'm going to teach today is called technical analysis. Of course, you wanted to know market trend. You can use both. Fundamental analysis is when economy is very good, meaning all the countries doing well. Your economic data is positive, meaning the market will be going up. Okay, for example, after COVID, when the moment they announced we have a vaccine, somewhere in I think around but 4 or 3 months ago, suddenly market shoot up because it's market confidence. So you can use those kind of indicators as a fundamental knowledge for you to recognize the market trend. But many people prefer technical analysis because you can see the market movement in a graphical form. Okay, so one of the example is a candlestick chart, what I'm going to teach today. So from the candlestick chart, you're able to see is it a market going to make a positive trend or negative trend. Okay, so in this session, I'm going to teach about around 5 candles, which is very popular among the traders. Okay, hopefully after this session, you pretty much know how to read the chart and able to predict the market movement. Okay.
Okay. Thank you.
Okay. Okay. Now. So our learning objective today is after this session, you are able to read the candlestick chart pattern. We call price action pattern because everything we are talking about here is price. Okay, in the market, the price of the stock or the currency price, buy and sell. Okay, and after you go, once you are able to read the candlestick chart, you are able to decipher the price action. When I say decipher the price action is you are able to predict whether the market going to make a move to the higher side, and it's going to go up or go down. And based on that, you can set up your trade setup. Okay. Now, so throughout the session, these are the topics that we are going to cover. So I'm going to share a little bit about the candlestick chart, the history, and those candlestick pattern which are very, very popular among the traders, and price action as well as the trading opportunity. Based on once you decode the price action, right, then you're able to see whether you have any opportunity for trade. And I will be covering a little bit on the trading psychology as well as risk management. And finally, we'll go through a few charts and walk through with you how to analyze. And I will give some question to check whether you understand the topic. Okay, so you can always ask me any question, and I will try my best to explain to make your understanding better. Okay, now can you see this chart? This chart is actually our Bursa Malaysia KL Composite Index. Normally I use this chart whenever I buy a mutual fund. So this is very good indicator for you. If the Bursa go up, the fund that you buy in public mutual, it will show some increment in the price. Then you make more money. But if the market is going down, like Bursa is going down, today, what do you see in this chart? What do you see in this chart? What do you see?
The market is going down, right?
Probably, okay. So you're referring to this area, right?
Correct.
Okay. Yeah, because market is going down. So you see the rectangle shape here? All this rectangle shape is called candlestick.
Okay.
Yeah, because it looks like a candle. For example, if you look at this candle, right? This is the body of the candle, and the small shadow here, this is called wick. So for example, this is look like a candle. That is why they call candlestick chart. Okay, but now it seems like market going to go down, but you got to be very careful because you need to put a lot of, you need to consider many other factors for you to make the right decision. Okay, though it looks like it's going down, but it may reverse. Okay, for some reason. If you go very detailed on technical analysis, you may not take the trade because you see this area. This is kind of support here. So the market may stop and may reverse. So this is one of the knowledge that you must acquire. So this is very basic, but again, if you put other knowledge and fundamental knowledge as well, then it will help you to really see where the market is going to be in the future. Maybe next few days, you are able to know whether market is going to be bullish or bearish. Now, talking about candlestick, so we can trace back the history to 18th century. Mr. Munni Ise Homa is the person known as father of candlestick. Okay, he was a rice merchant. Basically, he do trade on daily basis. He sell rice in the future market. Then he is very good in predicting the price, whether the price going to go up or going to go down. How he did it? Basically, he tracked all the market price. Daily, he tracked the market price. What is the opening price? If you see here, this candlestick, this is the opening price. And when the buyer come in, the price will go up. And throughout the session, when I say session, the market may start 8 o'clock and close at 4 o'clock. Our market, Malaysia, start around 9 and close at around 4:55. Okay, so when market start, this is open price, and when the buyer comes in, maybe buyer may have confidence that the market going to go up, so they started to push the price up. Okay, and they may push to the highest level, but again the sellers may think that market may go down. So they try to push the price down. And by the time market close, so this is the level, the price close on that particular session. So this is the body and this is the shadow, or they call wick. So when you see open price is lower than the closing price, this is called bullish candle. Again, if you look at this candle, open price is higher than closing price, meaning the market moved down. Can you see the arrow?
Yeah.
So this is called bearish market. Got it? Any questions? Any questions? No question? Okay, let's move on. So I'm very sure that when you read any article or any bulletin, right, they say market is bullish or market is bearish. Do you know why they call bullish and bearish? Bullish is referring to when market is in upward movement. Bearish is referring to market in downward movement. And basically, it is the type, I mean, the way the animal attacks. So that's why when market goes up, like the bull attack from bottom up, right? So it is bullish. When the way the bear attacks, it will pull you down. So market is going down. That is how they refer. Okay. Now, I'm going to share with you the best known candlestick pattern. What I mean is very popular among the traders. Okay. The first one we call bullish engulfing. Okay. Bullish engulfing. Why they call bullish engulfing? If you look at the chart here, the market is going down, right? At one point, the market stops and try to push up. But the candle that pushing up now, it engulfed the previous day candle, previous day. For example, like let's say this is today's candle and this is yesterday's candle. The body completely engulfed the previous day candle's body. It means buyers are coming in and they are pushing the price up and the price closed much higher than previous day, because previous day the close price is here and the lowest price is here, but now the highest price is much higher. So that give kind of indication for you that the market sentiment has changed and the more buyers are coming in. So these are the information that you can read through the candlestick chart, especially when you use when you see bullish engulfing. It tells you that market going to reverse. Okay, so you need to recognize those patterns. Any question, Megan, so far?
So far, so good. No issue.
So the next candle, bearish engulfing. Bearish engulfing is same like a bullish. Bullish is market, market was coming down, then it is reversed now based on the bullish engulfing candle. But now if you look at this chart, market going up, right? Market was going up and it stopped at one point, then market is reversing. This candle now engulfed the previous day candle's body completely. And if you look at the lowest price is much lower than previous day highest price or closing price. So that tells you kind of a indication that market probably going to reverse to the downside. But most of the traders don't enter the moment they see this candle. Probably they will wait for the next day. When the next day also you see the bearish candle, that is kind of like a reconfirmation that market will go down and you take the trade. Okay. The next candle is hammer and hangman. This is my favorite candle. And this candle is very, very prominent whenever big news in the market. For example, election, or sometime any disaster in the country, which impact which impact their economy. For example, if you look at I think in 2011 when tsunami attacks Kobe City, right? You can see the currency, yen currency, right? It really fell down drastically. Okay, and during that time, when you look at that chart on that particular day, you will see the hammer. So hammer is very, very prominent. Okay, and hammer is referring to bullish market, because if you look at this chart, market was coming down, and the sellers actually tried to push the market further down, but however, buyers comes in and they push the price up. So that is why you have a long wick. So hammer is, you can identify hammer if you have the long wick and small body, because it tells you that sellers push down the price and buyers push up the price all the way up. So this is bullish. If you look at another candle, Hangman, market was going up, but again, buyers trying to push the price up. However, they couldn't push further, then the sellers trying to push down the price all the way down, and they settle somewhere here. Then the next day, you see the bearish candle again. This reconfirm that the price going to go down, the market going to reverse. So that is how you read the candle. This candle will give you this kind of prediction. What's next in the market, right? Okay. So there are certain criteria that you need to follow, especially for the hammer. The long shadow, when I say long shadow, this is the shadow, right? And this is the body. The long shadow or wick is about 2/3 of the size of the real body. So if this is your size of the body, right? So this shadow is supposed to be 2/3 minimum. Then it gives you the confidence that this is the hammer, and you can use this as an indicator for you to go into trade.
Branches, I have a question here, Megam. If I see this sign of hammer, can I say that confidently that the market is going to go higher? And can I start investing my funds into the market? Is this the right way to do?
Okay, it's a good question. So the moment you see this candle hammer, right? If you are you are able to take the risk, you can always go in. But my advice is not, because sometimes you can't predict the market 100%. If people can predict the market 100%, I think everyone can make money in the market easily, right? Okay, so it is not as easy as you think. So normally what I will do is, the moment I look at the candle hammer, I will wait for the next day. If the next day also I see the bullish candle, then I will enter. And the way I enter is, I set my entry somewhere middle of the week here, because I know most of the time market will retrace back to test whether this is really, to reconfirm whether the buyers are holding the position, right? So the most of the time the market will come down and test, and then it make movement again. So the safest is, you can set the entry here. Again, this is my advice. Okay, you don't take my advice 100%. You have to go through and you have to practice. Okay, so this is how I set my entries. I will set my entry, so when the market comes and hit again, then the trade is triggered. Then when market goes up, then I'll make money. If the market goes down, then I lose the money. But again, you need to do good money management. You must have the good money management. If you don't have a good money management, then you'll be in trouble. Did I answer your question?
Yes, yes.
Okay. Let's move on. So this hammer, if you see in the uptrend market, they call hangman because it looks like somebody hang themselves, right? Is this head and this is the body, right? So it's like somebody is hang in the market that move up, meaning it's going to come down. Because if you are very optimistic that this market going to go up, then it's going to be a trouble for you. Okay, the next candle is tweezer bottom and tops. Why they call tweezer bottom and tops? Because you see these two candles, the market was coming down, right? And the lowest of this candle and the lowest of the next candle hit the same point, right? So that's why if they call tweezer bottom, that means they are testing this level, and the next candle also test this candle level and goes up. So meaning this provide you a kind of strong support in the market. Then you can see that if the next day the market still going up, then you can take the trade. So this will be like bullish market. And if you look at these tweezer tops, this if the market in the positive trend or going up, market was going up, and at one level they test this level. So normally this is called resistance, this is called support area, resistance area. So when the market tests the resistance area and couldn't break, then even the next day market again retests the same level, still not successful. Then the following day market falling down. So this is kind of like prediction that market will go down.
Branches, let me clarify this. For tweezer tops, when you start to see tweezer top, means like what you said, the price cannot penetrate the resistance level.
Right.
So this shows that the high confidence that the market will never going to go beyond the high chances lah. It won't go beyond the resistance level, right?
Right. When we talk about technical analysis, there's always a probability of winning trade, right? So nobody can say 100%. But this give you kind of confidence saying that you must look at the previous candle. You must look at the complete chart, When you look at the complete chart, probably this area is previously it was a resistant area somewhere here. So you need to take into that factor. If this happen at the place where there is no resistance at all, so it doesn't have any meaning.
Okay.
So if you take the trade, so it's always a risk. So normally you can see that when you see tweezer tops, right? Probably you can see it is the previous resistance level. That's why you need to look at the complete chart. Later, I will show you the currency chart. Then I will explain to you whether we can see tweezer top or tweezer bottom.
Okay.
Okay. Any questions so far? Okay. Now, the another candle also is very popular. They call Morningstar or Evening Star. Okay, this is a combination of three candle pattern. So when we talk about Morningstar or Evening Star, you must look at it as a three candle pattern. You must have three candles to tell you what is the market movement. Is it going to reverse or is it going to continue? For example, when I say three candle pattern, see the market was coming down. This is bearish candle. Then you see the small candle here. This is called doji. Doji mean in the Japanese word, you say that the meaning is undecided or indecision. Because why? Market here, if you look at this candle, right? Okay, for example, this candle, market open and close at the same price. But market, the buyer push all the way up the highest level, and the sellers also push the price all the way down during the session. But both of them come to agreement at one price, somewhere in the middle. Or it could happen, yeah. But the thing is, the idea is the opening price and closing price is same, meaning they can't decide which direction to go, right? So this is what they call doji. So when market was coming down, then suddenly on this day, they couldn't make any decision whether to push the market, to let the market go down further or to push the market up, right? So at, at this level, there is a kind of indecision. But the next day, the market already gone up. So meaning it's a combination of bearish, indecision candle, doji, and bullish candle again. So this is what we call Morningstar. So that means market going to reverse and it's like a new beginning. Okay. So when you see this combination, then you can wait for the next candle. Then if the next candle is again bullish, then you're pretty much sure that, okay, it's going to go up. But here you see the candle bearish, but it's not very big enough, right, to engulf this previous candle here. So it's very small. So that means the market movement is very little. Probably market still not decided. And you look at the following day, again bullish. So this reconfirm your prediction, saying that yes, market going to go up. Then you take the trade. Same thing. When the market was going up, it was a bullish market, then indecision, then market coming down. So this is called evening star. Evening star is referring to bearish market, morning star referring to bullish market. Okay. Okay. Now let's look at this chart. I'm going to share with you the price action here. This is the example. You see this candle here, engulfing, because it engulfed the previous day candle. So this will tells you that market probably is going to push up. Then you can take the trade. But again, if you see, this is the kind of resistance, right? Because the previously market tried to push down but couldn't. Then it was like support. Now this support become the resistance, and this candle already break this resistance level. So it give you some level of confidence for you that okay, market going to reverse. But again, I need to remind you, there is not 100% probability here. It's always a probability of 85%, 80%, 90%, but not 100%. Okay, so you have to be very careful. There are many other tools that you need to combine if you really wanted to be successful. Same thing, bearish engulfing pattern. There is a bullish candle, small candle, and this was the resistance area, right? Initially, it was support area because market tried to penetrate, can't, then it reversed. Now, market already broken the support area, then come and retest. Every time when it break the support area, it will always come and retest to confirm whether this support area now become resistant. So it will test again and again. Okay. Now the same reason, it is kind of like testing this resistance, Okay. So when you see the bearish engulfing, then you're pretty much sure that probably the market going to go down. Okay. Yeah, this is another chart. We're talking about Morningstar because it's a bearish market. Then you see doji. Then you see the bullish candle. Then it shows that market probably going to reverse. Everything is probability. Okay. Now, if you look at this chart, what is going to happen next? Push up is going. You see the hammer. Sorry, this is the called shooting star. Then you see the bearish candle here. So what's going to happen next? Will you sell?
Okay. Yeah, looks like.
Okay, sorry guys, I have to tell you this. In a currency market, you can trade both direction, buy and sell. Okay, the stock market you only buy at a lower price and sell at higher price.
Mm.
So this chart is referring to the currency market. So this is like bearish market, right? Is it going to go down?
Probably.
Please type in your chat box, down or up?
Looks like.
Looks like going down. Looks like, huh?
Yes.
Looks like, okay. Uh, you have to wait and see in this case, because this area probably is going to serve as a support area, right?
Mm.
So
Okay.
if you take the trade, probably it's going to stop here, then it will reverse. So it is not a high probability trade here. So it's kind of a risky trade. It's all up to you, up to the traders. Okay. So if I were you, probably I won't take any trade. I just wait and watch. Okay.
Okay. All
Okay.
right.
Okay. Apart from this Morningstar, do you see any price action here in this chart? Because we were going through these few candles, right? Bullish engulfing, bearish engulfing, hammer, hangman, tweezer top, tweezer bottom. Remember? Or you want me to just show the slide again?
It's okay.
So, can you identify any price action here? How about this?
That looks
What is
like tweezer top, right?
that? Tweezer top, because the highest level, right? Say
Yeah.
we are like testing the same point, right?
Mm.
And further, this bearish candle is like engulfing the previous body, right? So that tells you that with the tweezer top at the bearish engulfing, so it gives you the higher confidence level,
Mm.
so that you can trade, sell.
Okay.
So this is how you see. Again, this is very basic, but you need to read further. I mean, more books. One of the books that I can introduce is written by Steve Nielsen. Okay, it's a good book you can read to understand. Okay. Now, talking about this trade, right? When you go into share market or currency market, we are human beings. Okay, we have feeling, fear, greed, right? When you started to make money, you become greedy. Then you want to make more money. When you started to lose money, you feel. I mean, you have the fear losing all the money that you have, right? So these two emotion, fear and greed, can lead you into a very difficult situation if you make every decision in your trade based on emotion only. Professional traders don't take trade based on emotion, based on logical thinking, based on technical analysis. Okay, so my advice is to be a good trader, one must know how to manage their emotion. If you're not able to manage your emotion well, then you are not fit to be trader. You are fit to be gambler. That's it. So there is always a different meaning. I mean, difference between the gambler and trader. Trader look at the charts, look at the read news in the market, in the market, the economic data. If you trade the stock of the company, you look at the balance sheet, you look at the P&L, right? So these people are called traders because they use data to analyze. They use chart to analyze. But gambler, probably based on emotion, based on news that he hear, then he has emotion saying that, okay, why not I enter? That he may lose or he may make money. It's always 50-50. But again, this is not advisable if you want to be a very good trader. Okay, so I would say one of the key success factor in trading is how well you manage your emotion. Okay, it took almost 3 to 4 years to manage my emotion. When I went through this candlestick chart analysis class, immediately I went into the market, then I lost money because all my decision is based on emotion. But it takes about 3 to 4 years to master that. That's why it's not as easy as you think, but you need to manage your emotion. You must know how to manage your emotion. Okay. And must be able to see the big picture. The moment you see the candle, okay, bullish engulfing or bearish engulfing, you just enter. Sometimes you got burned. So you have to be very, very careful. You need to look at the big picture and plan your strategy. Okay. So one of the things that you can do is risk reward. What is the level of risk that you are going to take? Because based on the amount of money that you have in the account, so you can pretty much decide how much money that you're willing to lose. Like today, people are buying cryptocurrency, right? Yeah, this is something that people feel that were very risky, but some people are very optimistic. So probably they have enough cash, probably they can just dump in about 5K and forget it. So that is the risk that they are taking. Maybe probably they can risk themselves another 5,000 ringgit. But they may think that, okay, if the market go up in the future, then they make money. But again, cryptocurrency also, you can look at the chart and see what is the market movement like, right? So there's always a correlation, cryptocurrency and USD dollar. So based on those knowledge, then you can enter the trade. For example, if you look at this chart, this is a resistance level, right? So it has tested first time, second time, third time, fourth time, and for the fifth time it tests again, and this is the sixth time, right? So looks like this resistance level is very, very strong. So some traders look at it, okay, probably this price may not go up further, probably is going to reverse. So what they do is they take the entry here and they put a level called stop loss. Okay, this is a stop loss. So this is the amount that they are willing to lose. But if the market really reverse, they can make profit. So there is always a ratio. If this is the amount that you are willing to lose, then this is the amount that if market reverse, this is the profit level. So this risk ratio is 1-to-1. And if you set your profit taking level at this level, because you may think that the market can come down further, right? Then this is a risk ratio 1-to-2. And if you set the profit taking level over here, this is risk level 1-to-3. That means you risk yourself about this much, then your profit is 3 times higher than your risk. So this is what we call calculated risk. So we have to practice that. Some traders, they take the trade, they don't even set the stop loss. So what happened is suddenly on big news in the market shoot up. Then the account is burnt. You lose so much of money because if you put the stop loss, automatically the software will cut loss here. So you protect your money. Okay. So normally for the novice, I mean, if you are very you are a beginner in the market, you can use this risk ratio 1-to-1. But 1-to-1 is not advisable because it depends on the number of trade that you take. Right? So normally 1 to 2 is advisable. But again, this is my advice. So don't follow blindly, please. Okay. Any question? Please write your question in the chat box. So I'll try my best to explain to you. No question? Okay, let's move on. Okay. What do you see here? Hello? Anyone there?
Yeah, we are here.
Okay. So you are seeing this, you can see the chart here, right? So market going down, right?
Yeah.
So then you see there is a hammer, right? Then there is a kind of like bullish candle here. If you only look at this chart, you still don't know what's going to happen next, right? But the next day, right, when I blow up this this chart, right? Okay. So the next day when you see this bullish candle, it tells you that market probably going to reverse.
Yeah.
Okay. So here, if you look at this chart again, do you have trading opportunity here? Just look at this chart. Are we able to take any trade here? Probably yes, here, right? This is kind of a resistance level. So you can take your trade here. How about this graph? If you look at this chart, it's coming down. Probably you may think that you wanted to buy or sell here based on this.
Maybe we should buy.
You should buy. Okay, some traders, okay, based on this candle, they decide that okay, market going to reverse, so they buy. So they are the risk takers. Some people they wait and see for the next candle. So on the next day, if you look at this chart, another bullish candle, right? So this will reconfirm that market probably going to go up. So you can enter. Then you make your profit here. This is how you analyze the chart. Got it?
Yeah.
Okay. Now, quiz. I'm going to test your understanding. So you can see the circles, right? A, B, C, D, E, right? Okay, tell me name of those candles. I give choices here, bearish engulfing, tweezer top, bullish engulfing. Can you please identify which one is bearish engulfing?
I can see D.
D?
The bullish is actually engulfing the previous day's bearish candlestick. So I think D can be a bearish engulfing.
D or B? Can you type in the
chat? Yeah, I think both B and D seems to be more promising. B and D.
Yeah. Okay.
Yeah.
Okay.
Okay.
Okay. How about E? Do you think E is a bullish engulfing? Highest probability is here E, right? Because there is a support level and the market hit the support level and is a bullish engulfing. So this is kind of a reconfirmation saying that the market going to go up. You can take the trade here, but there is a kind of risk because the support level is here, because the previous low is here. So market may reverse again to test this area, right? So when reverse, you may have, then you go through the fear saying that, oh, I'm going to lose the money. So what do? Sometimes you exit from the trade. Then later the market reverse. So these are the common things that happen in the market. How about this? Any opportunity here?
Can I say that that particular point that you are pointing right now, is it something like evening star?
You can say that, but normally the evening star is a combination of bullish candle, then doji and bearish. But this is not a bullish candle, right? So,
Okay.
but it is similar. So if you willing to take the risk, you can think that, okay, yes, I'm going to go in. So you go in. And if the market go according to the direction that you predicted, then you'll be very happy to see the money is growing, right? But again, you take the risk, you put the stop loss somewhere here. It's all calculated risk. So you're willing to lose a small portion here, but your profit is much, much higher. That defines the good trader. Okay, understand?
Right.
Okay, now here, this is a currency chart, pound yen. So where do you take the trade? A, B, C, D. Which level will give you the highest confidence? Will you take the trade here or here, where?
I think should be C.
Okay, C. Very good.
Because it's closer to the higher point. That means I think the market is testing the resistance level, right?
Correct. But you need to confirm with the previous day chart, because this is only a small portion of the chart that I have extracted. So if you really look at the software that you use, you can always backtrack the price. Then you can see whether was there any resistance level here. If it is the resistance level, then you can take the trade, because the resistance level, buyer tried to push up but unsuccessfully. So sellers push down again. Then the next day is indecision, right? Again, the doji. Then the following day, bearish candles. So in this case, your confidence is much higher. Okay? Good. Okay. That's all. Thank you for joining this webinar. So you can, we still have around 6 minutes. You can always ask questions before we end the session. Okay, now I see Bina there, Adrina, no question. Okay, now I'm going to open one of the chart. Okay, this is Aussie USD, Australian USD. So what is your prediction? You see hammer, right? You see hammer.
Branches, we don't see anything yet. You need to share your screen.
Oh, okay.
You can't see the chart.
Let me share the screen. Okay. Can you see?
Okay.
Okay, we have another session later, so I should end anytime from now. But you need, if you want a confirmation, you need to probably you need to see the previous area. Is it a resistance here? You need to confirm by scrolling. So if you look at it, the resistance is here based on weekly chart. So probably it may go and test this level. So it's always a kind of how well you analyze this chart. Okay.
All right.
Okay, so if there's no question, I will end this session because we have another session for another member of VLC class.
Okay.
Yeah,
Thank
Dina.
you, Francis.
Okay.
Thank you so much, sir.
So probably you can practice, read more books. There are many books in the. You can just Google. There are many books, so that will give you some idea. But it takes time for you to master. Okay, so it takes almost about 4 to 5 years for me. Because emotion is one thing that we need to control. We need to manage. If you can't, again, if you can't manage the emotion, probably you're asking for trouble. My advice, don't enter the market. Okay.
All right.
Okay, guys. So
Thank you.
you can always contact me through WhatsApp. Okay. Thank you, Bina. So any question, if you want to see what's the market direction, I'm very glad to tell you. Okay. Thank
All right.
you.
Thank you.
See you guys.
All right.
Okay.
Welcome, sir.
Bye.
See you then. Bye-bye.
Okay.
Take care.
Bye.
Bye.